Raychaudhuri is joining us from BNP Paribas. Manishi, good morning. Thanks a lot for joining us. How should one read into this whole, US bond yield situation and the impact on equities? Would you be concerned if you were a bull?
Well, it's no doubt this volatility is likely to continue for quite some time. We have had two things converging together. Number one, this spike in yields, which has raised concerns about what the global central banks are going to do going forward. And it also raises concerns about flows moving away from emerging markets back into the safe haven destinations like the US dollar denominated assets. But at this point, I would like to mention that yields going up are driven by two factors. First, increasing inflation expectations, and secondly, increasing growth expectations. So while the first leg or the early part of yield spike, which we had seen in early January, that was largely driven by inflation expectations going up, which was visible in the break-even inflation, the BEI, that we track, the 10-year break-even inflation in the United States. The most recent spike is actually driven more by growth expectations going up, which is not actually a bad outcome for risk assets. So we think that once the dust settles and once the markets are, sort of reassured that the global central banks, including the Fed, are not likely to move away from the QE and the accommodative monetary policy that they have today, then we are actually going to see the next leg up in equities. So we're not at this point, sort of losing our faith on emerging market equities. We remain positive. And, in fact, even in our asset allocation, we are moving possibly more towards the reflation and reopening plays.
Okay. Okay. Manishi, good morning. Good to hear that you're expecting this bond spike and its impact on equities to be temporary. But are you already buying? Or do you think markets will take time to make their peace?
Well, this is this bond yield spike, which has raised these concerns. They've also coincided with very high valuations in equities, particularly in the so-called growth sectors. So part of the correction that we've seen, and MSCI Asia ex-Japan is down almost 9% from the recent peak, is also a valuation correction that was waiting to happen. So we think that this round of volatility would continue for some time now. And as a consequence, this may not be the right time to jump into equities right away. I would rather wait for, as I said, and to use that phrase again, for the dust to settle. And I think the markets, despite the fact that most central bank governors have talked about maintaining the kind of QE that they're doing right now, I think the market would need to be reassured on that front. So, it's possibly better for investors to hold out for now. And I'm sure they would find a better buying opportunity sometime